Welcome to the Open Treasury Podcast, your go-to source for the latest news and analysis in corporate cash and treasury management. This show is brought to you by CTMfile.com and the Treasury News Network, where Treasury professionals learn and share the information that matters most.
Hello and a warm welcome to the Open Treasury Podcast from CTMfile. I'm Pushpendra Mehta, Executive Writer for CTMfile and standing in for Jack Large, who is off. I have with me Craig Jeffery, Managing Partner and Strategic Treasurer. We will review some of the latest Treasury news and developments that bear amplification. The first story that is hot off the press is how CFOs are slow to automate despite the pandemic. This article, driven off research by Forrester, tells a story on slow automation and a continuing lack of comprehensive visibility in accounts receivable and accounts payable. What do you make of it, Greg?
This is an interesting article and research by Forrester, as you mentioned. And, as I read through this, I think there's a lot of good information. I did feel it was a bit of a glass half empty rather than half full story. But there was a lot of good points. A couple of the highlights that came out of it is that, just about 3/4 of finance executives said that, the pandemic highlighted the need for, faster, more real-time tracking of cash flows, both in and out. But only about 1 in 8 or 12% are automating their accounts receivable and accounts payable in this manner. So there's more comprehensive view. So other elements push, they mentioned most everyone wants this better, more comprehensive visibility, and not many are doing it, as they point out in the article. From a forecasting perspective, they pointed out that, about 4 in 5 financial executives want, holistic cash forecasting or comprehensive cash forecasting, but only about 1 in 20 have the partners or the systems in place to do so. And so that's a significant area of opportunity for improvement, especially as you look across the board. So we know people are, and companies are implementing better and improvements in cash forecasting and components, but this comprehensive look is interesting. And, a couple other points that they brought up, a little over half of companies are struggling to upgrade payment processes to meet their user needs. And their insight is, 70% of their cash flow systems only give limited or partial insight into their company's financial position. But the excellent analysis here, Forrester said, to gain the benefits of holistic cash forecasting, CFOs need to be leaders in driving the process automation and the data integration across and between AP and AR. I think that's excellent analysis. There's a lot of room for improvement. There's significant movement that's happened through this time. Forrester's, really pulling out some good information on where there's a lot of room to go.
Thank you, Craig. That made for very interesting analysis. May I move forward and ask you or discuss the second article, which is about SAP acquiring Taulia. This is a major announcement as an ERP provider makes a majority investment into Taulia, a supply chain finance company. What do you think are the key elements of this deal?
Yeah, this is a big deal. A major ERP provider, SAP, acquires a major supply chain finance company, Taulia. So this is not small. And so SAP has become a majority owner. There's still other owners. I guess when I look at this, I see this as a significant network play. Interesting to see the concentration overlap between SAP customers and Taulia customers. I think they identified that over 80% of Taulia customers operates in the SAP ERP system. So they use SAP already. So this is a play to expand that, and also extend what they're doing. So this ability for Taulia to continue to scale, I think is good and helpful. I think it also, this power of a network, the ability to do and perhaps achieve greater integration, it makes significant sense. And why we pay attention to the SCF environment, the fintechs there, is that supply chain financing and dynamic discounting, these tools are increasingly popular, and there is a significant opportunity and expectation of growth. So we see this as good for both of these firms. A lot of interesting items, JP Morgan, UniCredit, and other organizations that we're investing in Taulia continue to do so. So just a really, really interesting story, this roll up here.
Wow. That does for sure enrich our editorial mindset. Going forward, the third piece of news that was very interesting is corporate cash management automation and how it revolved around Capital One and Trovata partnership. Trovata has expanded their list of banking partners, and this now includes Capital One. It is certainly newsworthy, but why would this feature as the top news for the past few weeks?
At some point, one more bank becoming part of a fintech's, suite of API offerings and partnerships becomes less of a story. This list of what Trovata is doing in terms of partnering with more and more banks is becoming a increasingly larger list of who's who. They continue to partner with more large firms. So when we look at Capital One, this is the 10th largest firm, 10th largest bank in the U.S. by assets, a little over $360 billion in assets. And so this continued build out by Trovata with their partners, these API integrations and libraries, this really simplifies a lot of activities for banks as they serve their customers, but also for corporate users who, maybe dealing with multiple institutions or just one. That's a significant push, another top 10 bank into the stable of partnerships. And looking at, Phil Beck, who heads Treasury at Capital One, and Brett Turner, who's the CEO of Trovata. They are both fintech thought leaders across different spaces. They've done a number of things in different places. So a bank and a fintech continuing to get together. This is more of the same trend that both of these organizations have been on, leveraging tech to help their partners, help themselves achieve scale and provide better offerings.
Interesting that you mentioned banks and fintechs, because the next story, which is the quiet burial for the Diem stablecoin, seems to be in the process of being unplugged by Facebook. Bloomberg indicated that sources say the process to sell its IP is underway. What has happened, and what does this mean?
Yeah, and maybe it's quiet, maybe it's not so quiet, the burial of the Diem stablecoin. Let's think about name changes on this. Libra changed to Diem, and this was all part of the Facebook, which is now Meta. So how are we going to keep all these things straight in our heads? But both of those underwent name changes. So back in June of 2019, Facebook announced this launch. At the time, it was Libra was going to be the new stablecoin. This was going to be the main currency. Pretty much anybody in the world would be able to make movements. But what has happened is there's been some significant headwinds from regulators, policymakers, others that have raised concerns. Some of them, were concerned about privacy, how Facebook's handling user information, and there was obviously some current concerns about crime, money laundering, some of those issues that can come about from some of the digital currencies. And so this was this represented significant headwinds, or maybe even more than just wind. But some of the original members departed before the end of 2019. So from June to the end of 2019, we saw PayPal, eBay, Visa, MasterCard, Stripe exiting from being founding members during that time. So now we see and hear from Bloomberg's report that they've have information that the organization is looking to cash out on some of the IP, find some home for the IP, return some of the capital to the investors. I think what's interesting here is we need to be careful and watchful on different types of digital currency. I think we have to remind ourselves not to be too pessimistic or too optimistic on these fronts about the digital currencies, but a healthy dose of caution is in order on all of these different schemes, setups, and plans, because certain things can derail them really quickly. So this quiet burial for the Diem stablecoin is perhaps not as quiet as people would like.
Those are very interesting comments. May I pick on your brain for what you think is your choice for the biggest story of the past week?
Yeah, I'm definitely going with the SAP making the major investment in Taulia because it's a big network play. It's two significant players in here. I think that has the biggest impact on the overall industry of financial systems, fintechs, and financing. So that's number one by a margin in my mind.
Thank you so much, Craig, for your discerning comments and valuable insights. Thank you all for joining us on this edition of Open Treasury. Please subscribe and look in the show notes for the article links. Thank you.
Thank you so much, Push.
This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.